Hi everyone, my name is Rishit. Today is the 23rd of April 2023 and I'm going to be giving my weekly prediction for SPY for the week ending the 28th of April 2023. As usual, I'll start with the disclaimer, then we'll go through the monthly, weekly, and daily charts. So, before covering the next part of the video, it's important for all viewers to understand that all information in this video is completely for educational purposes and it's unadvised to take a trade based purely off of the information presented in this video, since markets are subject to risk and you can result in hefty losses if uninformed positions are taken. Therefore, it is advised to consult a financial advisor before taking any positions in the market based off of the content in this video. So now let's move on to the monthly charts. As we can see, the monthly charts have been in a sideways trend for quite a long time. Now there was a breakout here, but it ended up being a whipsaw. But as you can see, for the last 5 months, we have been in a trading range, which I've specified at 418 and 375 as a resistance and support, respectively. Now, last month, the month of March, we had a hammer candlestick pattern, which means that this month is expected to close higher than the previous month, because the hammer is a very, very bullish pattern. Also, it can be expected that this long-term resistance is broken, since as you can see, the current spot price is 412. However, the resistance line is only at 418, so it is very much possible that this week could result in the break of the resistance line. However, I will cover what my actual prediction is based off of the weekly and daily charts. Since the monthly charts only offer a long-term view and my positions or my views are based weekly, so it's more important to also look at the weekly and daily charts. Speaking of which, the weekly charts here, we can see we have an upwards channel, which I have drawn here. We had the 3 white soldiers candle pattern, which is a very, very strong bullish reversal candle. Then we had a doji, of which the support and resistance got not necessarily, it broke, and the week did close at a minus 0.06%. Actually, no, never mind. The market did not break it since it was a whipsaw. And this week as well, we have another doji candle. So this means that we are in a very volatile or sideways market, and it is again very important to wait for the breaks of these important supports and resistance before taking a position, because now that we have 2 dojis, even though not consecutively, we still have 2 dojis in the span of a month, which means that whenever the resistance or support of these dojis are broken and closed over, then we have a very, very strong chance of an upwards reversal or a downwards reversal, since if it does close upwards of the resistance of this week's doji, for example, then again, we have a very strong possibility of an upwards rally, a very strong one at that. And likewise, if it closes below the low of this doji, or if you want to be safe to close of this, the low of this doji, then we have the possibility of a very strong downwards reversal. And I'll also mention in the daily charts certain candlestick patterns and oscillators which show contradictory opinions. And another thing to keep in mind is now that the market is very close to the top end of the Bollinger, it is very likely that it reverses to the mean, which will also play into my prediction this week. Now let's finally go into the daily charts. Here's where things get a lot more interesting. And if we unhide the momentum, we can see a very clear divergence in the 2 markets. As you can see, the momentum has a clear downward sloping trend line, and on the same day, we can see an upward sloping trend line from that day to today, showing a clear bearish divergence, meaning that it is highly, highly expected that the market ends up going downwards. Now, for candlestick patterns, we do have a dragonfly doji here, but that's only because we have a strong support point as well. But it is to be known that this week is very, very news and data heavy, since the top performers of SPX are giving their performance reports, the quarterly performance reports, and those will sway the market very heavily. So it's important that whatever position you take this week, it's in light amounts, since the data can completely sway the market and the price of SPX altogether, as evaluations dictate the price of those stocks, which also dictate the price of SPX. But as we can see, we have a clear bearish diversion, which shows a rather bullish implication for the market in the coming weeks. Also, if we apply the MACD oscillator, we can see that a very similar story is told here as well, since the blue line, or the shorter EMA, is about to diverge with the longer EMA, which means that the market, as you can see, the shorter EMA has been going high, and the market has been an uptrend. But recently, it has started to tilt downwards, and so has the yellow line, which indicates an upcoming downward overtake by the shorter moving average, which is a very, very bearish indicator. And the day that this happens, if it does end up happening this week, would be a complete bearish confirmation technically. However, again, as I mentioned, the data coming this week could sway the market in ways that are not predicted by technical analysis, so any positions that you take should be very light to avoid hefty losses in the market. Now that we've covered the charts, let's move over to the Excel sheet where I go over a in-depth paragraph form version of my prediction, and I'll go review shortly last week's prediction. Last week, there was no trade that was triggered. As you can see, we didn't cross the support or resistance point. We did open below it, but it ended up closing below, so we avoided a whipsaw there. So there was no trade trigger for last week. This week, again, we have no trade yet, and we wait for the trading range breakout. Buy when it crosses the high waves high at 415.09, and sell when it falls below the high wave low, 410.06. With a target of 1%, trailing stop loss. And another thing that I mentioned last week was if this trade does happen before the last day, then the target is 0.5%. Since 1% is nearly impossible, it does happen, but it very rarely. So 0.5% is a more realistic target for the last day only. Anytime before the last day, if the trade is triggered, then the target is still 1%, with a trailing stop loss, of course. If the target or stop loss are not hit, then we take the closing price on Friday. Now the max OI from the monthly expiry is 400 for CE with an OI of 51,487 and 400 for PE with an OI of 166,641. Now the PE is up and CE is down, which is a bullish indicator from the option chain. The monthly PCR is 2.49. And the max OI for weekly expiry is 416 for the CE with an open interest of 28,180 and 400 for PE, which is 34,943, and both the PE and CE are down from last week, the levels, which indicates nothing. And the weekly PCR is 2.52. The weekly candle chart shows doji candles, and the daily chart showed a high wave candle, which we could see here. The price has to break the high and low of the high wave candle, and the price action currently is an upper channel, which is showed in the chart, and the weekly trend is up for the moment, but we can see there's a divergence in the momentum, and the monthly trend is sideways. So as we can see, we have very conflicting signals from the option chain and technical analysis, and we also have to keep in mind the news events coming this week. So for the last 3 weeks, no trades yet. We wait for the support and resistance zone to be broken, and then we take a trade. Depending on the day it's broken, the target will be different. But that's all I have to cover for this video, and if any updates are made on the trade, I will make another video explaining it, and I'll review next week's trade as well in the video that I make for SPY. And on this note, I'd like to conclude the video, and I'll see you next week.